very interesting time to be investing in the private credit markets today. So on the one hand, I feel as though it is a real validation of private credit as an alternative to the banks, as well as it's establishing itself as an alternative to, frankly, the public financing markets right now, right? So across a variety of strategies, whether it be the upper middle market, the lower middle market, a variety of strategies with respect to private credit that are in between, which is what we do. It is a very, very interesting time to be investing in private credit across the board. Look, I think there are a few fold. On the one hand, while the investing opportunity set for new investments is very, very exciting, I think GPs and by extension LPs will become much more inwardly focused as a result of their existing portfolios facing a variety of real challenges. Right, so people talked about COVID being one of the first real tests of the industry. I actually don't think that it really was, because the Fed stepped in so quickly. I think that we are actually on the cusp of a real test, where over the next 2 to 4 quarters, you will see people turning inward, because companies will be stressed both by a reduction in the pace of growth, reduction in revenue, etc., slowdown in revenue, squeezing of margins, as well as a potential liquidity squeeze, which is a very important thing because interest rates have gone up so much, they may have difficulty continuing to service their debt. It's a very interesting time to be talking to one another and testing and retesting one another's theses, right? So in our strategy, we focus on investing in senior secured floating rate income generative debt. So we stay very conservative in the capital structure, at the top of the capital structure or near the top of the capital structure, etc. But at the same time, we have enough opportunistic elements in our strategy that we can really lean into situations that offer those kinds of opportunities, right? At the same time, I think this is also unusual. As a firm, we bring together private credit, private equity, as well as operating company expertise as in-house employees within the team, right? And particularly with respect to existing portfolio companies, working through any of those challenges, as well as really differentiating between companies that may have short-term periods of pressure versus much more fundamental and existential long-term risk, will, I think, set ourselves up well to be able to do that as a result of those capabilities that exist in-house. It's a great event. We've been having, meeting with a lot of other GPs, a lot of other LPs, a lot of providers to the industry, etc. And so it's an interesting time, again, to be speaking with other people with respect to the opportunity set as well as the challenges in the industry. So I think it's a good time and a timely event.